This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, September 1st, 2015. Euro dollar. So not much going on in the euro on Monday, with the market putting in some inside day price action confined to Friday's range. At this point, we're going to see a break or a close above recent highs at 113.10 or a close back below the recent low at 11.55, 11.56 for clear directional insight. The market right now is confined to the middle of a range between that recent high that we saw at 117.15, which could be a medium-term lower top in favor of a more meaningful downtrend resumption, and that low that we saw going back to the 20th of July at 108.09. But again, for now, a close above 113.10 or back below 111.56 will be required for clear short-term directional insight. Sterling dollar. So a key short-term development with the pound on Monday, with the market finally closing back below the 200-day moving average. This could open the door for an acceleration of declines back towards some support at 150-170 in the form of that June 1st low. At this point, only a close back below recent highs that we saw at 155.09 would put the pressure back on the top side. Dollar yen. So dollar yen rally has stalled out now by the 61.8 Fib retracement off of that recent high-low move going back to the 12th of August down to the low that we saw on the 24th of August. At this point, the market does look like it could be putting in a lower top in favor of a resumption of declines back down towards that recent 116.12 low that we saw. At this point, a break and close back above 122 would be required to put the pressure back on the top side. Euro Swiss. So Euro Swiss continues to look like it's in recovery mode, with a higher low now sought out in the 107.14 area ahead of the next upside extension above 109.62 through 110 psychological barriers and towards 115 further up. At this point, ultimately, any setback should be very well supported above 105.75, which is previous resistance now turned support, with only a close below 105.75 to really compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie is hovering just off those recent multi-year lows that we saw, that 6-year low last Monday at 70.40, and there is the risk for an additional decline and close below 70.40 and a fresh downside extension into the 60s further down. At this point, any rallies that we do see in this market should be very well capped, with the market ultimately classifying those rallies as being corrective, and only back above 74.40 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD is finally seeing a bit of a correction off that recent 33.54 11-year high that we saw back on the 25th of August, and there is risk now for deeper setbacks, corrective setbacks, before the market looks to put in a higher low ahead of a bullish resumption above 33.54 and towards 135 further up. At this point, only back below 128.60 though would compromise the bullish outlook for dollar CAD. Kiwi dollar. So Kiwi remains locked within a well-defined downtrend, and the market looks like it could be poised for fresh downside below recent lows that we saw, multi-year lows at 61.30 from last Monday. At this point, a close below 61.30 will open the fresh downside extension towards the 55 area further down, while ultimately any rallies are classified as corrective and should be very well capped ahead of 67.40. Only a break back above 67.40 would compromise the current bearish outlook for Kiwi. SPX 500. So we've seen a sharp rally off those recent spike lows just ahead of 1800, with the market trading all the way back up just shy of 2000. At this point though, given the latest breakdown that we've seen over the past few weeks, or the past couple of weeks, the market does look like we're seeing a structural shift, and a lower top is sought out somewhere in the 2000 area ahead of a resumption of declines back down towards 1800 and potentially below. Gold. So gold continues to look like it's in the process of recovering out from those recent multi-year lows below 1100, and a higher low is now sought out somewhere above 1100 in favor of the next upside extension back above recent highs at 1170 and towards medium-term resistance at 1233 further up. Really only a close below 1100 would compromise the newly adopted constructive outlook for the gold market.